news, but so hold on a second. I'm just taking some profits on oil shorts that I've got in my book. I sold some oil into the 62.50s there, and I've managed to get some decent size on it, so I am just being very careful and taking some profits at 45s. Nice easy 5-tick profit means that I can get a stop in at break even, and I can get a stop in at break even, and we're in perfect shape then. So that's what we've done. Good. So we sold off the 40. We sold off the break of 50 into the 49s, 48s, short oil. And we've just traded some profits at 45s. I've booked that profit at 45, and I've got a short position still in place for oil prices to sell off. Good value at the top edge on oil just now. Some very, very obvious top edge stop liquidity value to take advantage of up here. If you zoom into the charts just there, you'll probably see our selling coming in. And you're obviously aware when we run the stops here, we know that there's a big wholesale of 62.50. That's what I'm kind of looking at. There's a short-term value in this trade, but the short-term value that we've seen over this period here, there's a bit of even shorter-term buyers coming in there. So you just got to be cautious not to sell it on the way up. To wait for the sell to come on the way back down again makes a lot of sense. So selling into that break of the 50 at 49.48, perfectly good trade. So that's why I was taking some profits of some 45s. And we've managed to get it down to 40s, which makes us pretty happy with our business so far off that top edge. We've got plenty of value in the short term side of the book. Good crack spread, good Brent oil spread as well. So I like the top edge sell at 62.50s, and working those orders makes a lot of sense. The dollar still catching buyers coming in here, still pushing through the trade levels. Cleared this background seller here. Got a good buyer coming in at this point, started to push the price through towards the top edges. We haven't seen that trapped buyer coming in just yet on the dollar. And obviously, one of the things you'll probably recognize is when the dollar catches a bid, sometimes it's on the back of good US news, and sometimes it's on the back of an unwind of, sometimes it's on the back of an unwind of a good position. So people moving back into risk off flows. But obviously with equities rallying just now, that's why with equities rallying and with the oil price doing pretty good business, you've just got to be cautious with the bond, because the dollar's not rising because of risk flow. The dollar rising when equities and oil are at bottom edges, that's when you get that automatic assumption that you've got to buy loads of bonds. But when oil's rising, when dollar rises and oil rises and equity rises, you've got to remember that that's a dollar positive, bond negative scenario. And because of that, you've just got to be patient if you're trying to buy a dollar against the bid that's coming in, buying a bond against a dollar that's got a bid in it. There's always that context that you need to pay attention to as a trader. You know, sometimes the dollar can go up and it can be negative for bonds, and sometimes the dollar can go up and it can be positive for bonds. So you've got to be the guy that knows the difference between those two trades. And as I said, this dollar bid here is looking very, very strong at the moment. Not seeing any blocks coming in just yet. You can see plenty of solid dollar buyers on the book, pushing the price north, and no way to stand in front of that choo-choo just at this point. The short oil trade is now looking very good indeed. We've managed to come off the high print of 50, the stops at 50. We've now traded down to a low print price of 30s. We've made 20 ticks. I hope somebody's on board with that one as well. News-wise, let's rattle quickly through the news. There hasn't been an awful lot to get through, so we'll just deal with what we have seen. German final GDP numbers beat expectations of 0.3 against a 0.1 prior. The overnight news was that the RBNZ did nothing. They didn't change the rates or added any real quality to any statements that they've added. Elsewhere, we've got some numbers out this afternoon. We've got the new home sales out of the US at 3 o'clock, forecast at 8.53 against 8.42 prior. We've obviously got the crude oil inventories at 3:30, usual slot this week, and the crude oil inventories scheduled for 3:30. Couple of comments, obviously Powell, but not expected to deviate much from what we've already seen, so no change to Powell's comments. We've also got Brainard and Clarida coming out as well this afternoon, so that might be actually slightly more interesting. If they back up what Powell's been saying, then obviously that could add an extra little twist to the to the never-ending upside on 10-year Treasury yields. So watch for that comment coming out this afternoon. Just be aware that it is happening. Watch for the two speakers at 3 o'clock, and then it's 6 o'clock, 3:30, sorry, and 6 o'clock tonight. Welcome in, guys. I hope you're all good. You've missed a great morning's London session. So hopefully the US session provides you with as many opportunities as we've had to trade in London. The bond trade this morning, I was talking about the guys about the difference between the maximum all-in trade versus the normal good trades should be quite significant. When you see a trade that we saw this morning on bonds, and when you go through the narrative of that trade this morning on bonds, that top edge sell, you don't want to just go maximum. You want to go super maximum into that trade, guys. Super maximum into that trade. Sounds as if it's perhaps a bit of a stretch, but when you know what you're doing, it just makes an awful lot of sense. And that's exactly how this bond top edge has played out. We came off 192.5. We got all the way down to 189.20s. It's nearly $3,000 short selling profits on a single lot trade, and we sold it a lot all the way down the whole process. We sold it a lot, and yeah, well, it's just absolutely amazing trade, guys. Absolutely amazing trade, especially when the gilts came in and they were massively overpriced. It just added a flood of treasury sellers at those prices, and it drove the price right clean down into bottom edges here. It's been a crazy good trade, and yeah, we're in absolutely fantastic position. Real yields rising against our overall inflation model. I'm a little bit passive on the bond at the moment. I am still a buyer, but I'm a little bit passive on it. I'm not trying to chase this bond at all, because with real yields rising and the dollar also rising at the same time, the bond has that, as I said before, when the dollar rises on the back of equities and oil higher prices, you've just got to be really passive trying to bid into your lower price bonds, but you can still do it. You've just got to be really careful not to overcommit at higher prices in bonds. Make sure if you're going to trade long bond that you demand those slightly lower prices to buy into. So just draw a little angled line on your charts. Make sure you kind of stick to that process. Otherwise, you're going to find yourself on the wrong side of the wrong trade. And the wrong trade in this case is that strong dollar bid with this bid still sitting on equities in the background. So just be careful with it, guys. It doesn't mean you can't buy it. It just means that when you do buy it, you've got to be really, really very, very demanding of what price you buy into, because this bond is on a charge. Talked to the guys earlier on today about the fact that 10-year yields, and it might have hopefully made us stuck, but I suggested to the guys earlier that 10-year yields actually have a significant upside still available to them. We suggested we could be trading up to the 140 to 150 basis point trade area. So therefore, buying bonds is going to be going against that overall parallel steepening narrative that we've got in the market today. And that's something you've just got to be very, very, if you're going to buy bonds, you know you're trading against a parallel steepener. You just need to know what you're doing. And if you dare cross the spread once to get a long bond trade, guys, my God, you've learned nothing about bond trading so far. So you've got to make sure if you're going to buy any bonds, you're demanding the lowest possible price on the limit order book and nowhere else, because it's difficult to be a bond buyer into these stories. You're better off trying to sell off that 190s and then running the price back down again and then looking again for another opportunity to buy bonds at some stage. I've bought bonds 3 times. I've made money 3 times. I've sold bonds twice off the 190s. I've made money on the short side of the book, but you've got to be trying, if you can, to get back into the short trade. It's very much like oil when it's in a backwardation position. You want to try and be long oil if you can, and if you're going to get short oil, you need to demand those higher prints, guys. It's just part and parcel of the same thing. So hopefully you've paid heed to what I was saying earlier on today about the 10-year Treasury yields hitting as high as 150 basis points. It's ripping higher here just now, guys. It's ripping higher in a parallel shift just now. And I don't see any reason why that can't keep ripping higher just now. So I am very, very, very happy with my bond trade. I've managed to get some short bonds, by the way, into this sell-off. And I'm going to be booking some profits just into the zeros here, the 189s, and that's another monster profit for me on this one, guys. Another monster profit for me on this. So I'm just going to be trying to book some profits into this little down move here into the 189 level. That was crazy. That was crazy good. Anyway, hopefully you've learned your lesson if you didn't follow what I was talking about this morning about this 10-year yield. This is a parallel shift. Parallel shifts are the most difficult markets to fade into, regardless of the levels, regardless of anything else, because it's a parallel shift, guys. You've got to realize that the first phase of any move is a parallel shift. These moves go further and longer than you'd ever imagine possible. And then what happens is you get the twist in the curve, and the twist in the curve takes the sting out of the bond moves, and you can start fading into twists. But during parallel shifts, you should be trying to go with that parallel shift as much as possible, guys. I've killed it today, absolutely killed it today, dominated this bond. And you know, you can see obviously plenty of opportunities to buy bonds, but also plenty of opportunities to sell back off that 190 level as the price traded back up into those key levels. The squeeze, unbelievable. My bottom edge exit, spot on perfect. And we've been short bonds since 6:30 this morning. So since 6:30 this morning, we've been selling bonds up here. We've been selling bonds in here. We've sold all the way down this whole process, and we've just absolutely annihilated bonds. Absolutely annihilated it, guys. Crazy? I'm right, it's crazy. Beautiful. So welcome in, guys. Welcome.